So, Donny, a lot of people often don't consider life insurance in general, but oftentimes they don't know the difference between term and permanent. So, can you explain the difference between term and permanent?
Yes, there's a lot of variance between the two. So term insurance, like typically no matter what company you go to, they will call the policy term insurance. Whereas if you go to permanent, there's so many different options that would get people confused when you're kind of looking at everything that you can put together there. Conceptually, the difference between the two is term insurance is covering you for a very specific amount of time. So it could be 10, 15, 20, or 30 years. It's very cost efficient for somebody who is younger. Again, like I spoke earlier, about it costing less. You can get a lot of insurance in a term policy for not too much money. So that insurability of getting it when you're younger and getting more when you're younger can play out very well over a long period of time. The downside of that is it does renew over time. So 10, 15, 20, or 30 years goes by, you have this policy that's going to renew at a higher price. So short term, very cost efficient, but over the long term, it will cost you more. The benefit of it though is you can get a lot of coverage for less.
And what happens if you get sick in like 5 years, 10 years? Do they have to reevaluate for a term policy?
So typically, as long as you already have the contract in force, typically the policy is not going to be affected by any health after the application. The type of policy you want to put in force is what you're doing pre-underwriting qualification. So when you get underwritten at the time of application, typically they're going to carry over the health of when you applied going forward.
What happens with the permanent policy after you pay it off?
Typically, once it's paid up, you don't have to pay another dollar going forward. So this goes back into there's a lot of different types of permanent insurance policies. There's just straight up a level premium and a level benefit. Typically, that's the baseline for permanent insurance. So if you have that set up, it's going to be, again, going back to that person who's 22 years old taking out a policy, they're going to pay the price of a 22-year-old from now until the rest of their life. And that's never going to change. So the longevity of permanent insurance is good. The downside is it's much more expensive than term insurance because you're locking in that premium now for the long term.
Do you know what the average cost difference between the two is?
It really does depend. A lot of it depends on you know what you're using it for. So typically you're using a term insurance policy to cover short-term needs. So if you have a house, for example, a mortgage you want to cover for 20 years, taking out a term 20 years of coverage for, let's say, $500,000, that's going to lock you in to cover that mortgage while you pay it off. But after that point in time, you typically don't need it. So if I compare that to a $500,000 permanent policy, it's going to be much, much more comparatively because you have $500,000 for your whole life, which most people don't really need $500,000 for their whole life. They maybe only need it for a specific amount of time. So typically permanent insurance for $50,000, it's going to be more, but you're probably locking in a little bit less coverage than the term insurance, if that makes sense.
That makes total sense. Absolutely.